Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. Good morning, everybody. Welcome back to another live stream. Hope you're doing well. And again, check out today's video sponsor, as mentioned, DNA Funded. They have been a really great sponsor of ours for a while, and we've had a lot of people tell us they really love working with DNA Markets and DNA Funded. Of course, they are two parts of the same kind of general world. But if you are interested in checking out DNA Funded, make sure, I always say this, I can't reiterate it enough. I know, of course, trading skill is very important, but also if you're going to trade with a prop firm, if you're going to trade with a brokerage, make sure you do a little bit of homework in regards to the best possible offers that you could possibly get when trading. I mean, think about the difference in, challenge fees. If you can get a 20% off discount, that's 20% right off the top of your cost of doing business as a trader if you choose to trade with a prop firm. So check out DNA Funded, make sure they're the right fit for you, do your own due diligence on them. And if they are right for you, then make sure use that promo code. It will get you 20% off and you'll be supporting the show here. So shout out to DNA. Thank you to them for sponsoring. Okay, so stock market continues to rip higher. And I think that this is a good example of a time in which the market kind of tests you. And when I say you, I'm really talking about me, because this rally in the stock market has been pretty much unending and in one direction. We are seeing stocks make incredible moves. And on one hand, it's sort of like a double-edged sword for me, because on one hand, I do own lots of individual stocks long, and my portfolios look very green because of that. However, from a trading perspective of wanting to be more actively long the S&P 500, the Nasdaq, etc., it has been a little difficult to grapple with the concept of no pullbacks, but this was a bias that I had. I had a bullish bias on indices and yet was not able to get a hold of any long positions because there really has not been a sufficient pullback for my trading strategy. Now, if you're long these things and doing incredible, then salute to you. I am jealous of you. That's fantastic. Now, for the rest of us who maybe are on the sidelines or people who may have been on the short side of this move, what can we do? Well, I'll tell you one thing that you cannot do. You cannot look left and get frustrated with the circumstance. All you can do is look forward, right? And this is a really important thing that we remember as traders, because look, I have been on the sidelines of so many incredible moves in my time as a trader. And I will be on the sidelines of countless more incredible moves. This limbo period where something just is melting off into the sunset and you're stuck sitting on the docks watching the ship sail away, right? It's not a good feeling, but it's also not a feeling that will ever go away. If you want to stay trading for a while, guess what? This is going to happen to you. And so, what can we do about this? I mean, you really have 3 options, right? Do you buy, do you sell, or do you wait? And shocker, the answer for me is going to be wait. I can't short the stock market up here because fundamentally, I think the stock market looks incredibly strong. And for now, momentum favors the bulls. Now, I know there are people who point out, there's this one guy who comments on my YouTube channel every single day pointing out, the Strait of Hormuz is going to collapse. Oil prices are going to go to 200, and it's like corruption, national debt. He lists off all of these bear cases every single day. I'm not even kidding about this. Like every day on one of my videos, he'll drop this comment. He'll be like, this is an easy short. The problem is he's been saying it's an easy short the whole way up. And I've seen this for years, right, on my channel. Every time the market starts to move lower, the bears come out of the woods and they come out strong and confident. And then when the rally starts to happen, the problem is a lot of those same bears get absolutely crushed because they are stuck in the doomsday, you know what, that you see all over social media, right? That stuff is very, very, I don't know what the correct vocab word for it is, but it works on people. Doomsday stuff really works in terms of getting people's attention. Fear is a very strong emotion for people. And so when you look at this and you say, the stock market's going up every day, it's incredibly strong, it's incredibly bullish, it can be very easy to start becoming spiteful, to be angry with it and say, no, this is rigged, it's manipulated. How could I have been fooled by this thing? It's a normal reaction. Like, you're human for feeling that if you feel that way. But the reality is, over and over, the market makes more sense when you understand that the stock market trades based on the earnings of those stocks. And the earnings of those stocks have been incredible. Like, earnings have been really strong. I think we had one of our strongest earnings cycles that we've had in years recently. Now, you could poke holes in it and say, well, it's because data center spending is out of control. It's going to go crazy. It's a bubble. It's going to blow up. Okay, let's grant you that. You still don't know when that ends. That could be a multi-year thing from here. You could have 4 years of data center buildouts that are expanding and excitement is enthusiastic for AI for 4 more years before it crashes. We don't know where the end of that data center spend is. And one thing, the reason following the trend is so powerful is because a lot of times you pull up a daily chart, the longer term trends can be persistent for a very long time, right? So when we look at this, I don't see a market where I'm arms folded, tears in my eyes, crying, manipulation and the market's rigged and betting my whole account that the thing is going to go down. Absolutely not. I see a market where AI spending is out of control. Sure. Is it a bubble? Maybe. But bubbles can inflate for a long time. And so, my opinion, there's a good risk reward on pullbacks. Now, I'm not telling you what to do. You do what you want. If you want to short the market, that's your choice. But for me, the only option is to wait for proper pullbacks. And if you don't get them, wipe your tears, come back the next day and get used to it. Because guess what? That's trading 101. Trading is painful. It's not easy. Yeah. Simon, you should join the Discord. There's a free Discord. If you scan the QR code, you can join the free chat. You should upgrade to the VIP chat. That's where the real action is. But you can start out for free. Scan that QR code right below my camera here. And let me just also drop it in the chat. If this is easier for you, if you just prefer to click it in the live stream chat, just click this link. You can join our Discord completely free. We've had a ton of people joining. What's up, Robo? Good to see you, my friend. Robo, that Uber move, not too shabby, huh? Uber up nicely, 6% today. I've been in the red on this stock for quite a while. I mean, just so we're all clear, though, when we're talking about stocks, indices, etc., there is a very distinct thing that I do want to warn about, which is we're talking about, data center build out. Everything looks really strong for stocks. If stock trading, if stock investing has been easy for you over the last few years, there is a really important reminder that I think is so critical to talk about. We are living in the last 5 years, 6 years in a very hospitable stock market. Every dip gets bought aggressively, and that won't go on forever, but I don't know where that ends either. And so again, I'm a trend follower. I'm not a big, fan of trying to predict, there's a huge colossal crash coming. And, over the years that I've been watching the markets, granted, we've never really had a very sustained bear market since I started trading in 2016, 2017. We've pretty much had a very hospitable stock market outside of 2022 and 2020 and 2025. I mean, these are tepid at best stock market pullbacks compared to the beasts that you can find in history. So I am always conscious of the idea that, you know, someday there's going to be a stock market sell-off that's not going to come back easy. But a quick thing to note on that is if you are somebody who is young, let's say under 45, like really young, not to throw any shade to my friends over there over 45. I'm just pointing out, like, if you have a very long time horizon in the stock market, you should be waking up every day hoping that we get a stock market correction that lasts. Why? Because stocks go up over the very long term. And so cheaper stock prices are, you know, a painful thing in the short run, but in the long term, oh my goodness, you're going to get way better. Well, not guaranteed, of course, but you're likely to get much better appreciation if you can buy something cheap and then watch it go up over the decades, right? One of the most frustrating things I would argue is that if you're somebody who is 25, 30, 35 years old, this is hard to, like, let's say that you do get, let's say all things turn worse for the next couple of years. I'm not saying I think that will happen. I personally don't, but let's just say it does. Let's say the AI stuff does blow up. In the short run, that'll be pandemonium. And if you're leveraged, you will blow up. If you're leveraged, it will all end for you. It will end in fire and flames and ashes. So careful with leverage. But if you're not leveraged and you're dollar cost averaging and you're patient, oh my gosh, the stock market blowing up on a bubble is a massive blessing in disguise. It would mean real estate prices come down. It would mean stocks valuations come down. You could load the boat. I'm not telling you to do this. I'm just telling you what I would probably do, and not financial advice. I'd load the boat on stocks that I like, great companies at great prices. Warren Buffett recently said at the shareholder meeting, he attended as a shareholder, which I thought was really cool. Warren Buffett, the most legendary investor of all time, undisputed champion of the markets. He basically says there's no stocks that he sees right now that are worth buying. Now, granted, Adam Koo, shout out to him if you know his channel, phenomenal channel. I love his stuff. I've watched him for, 10 years. He pointed out that Warren Buffett doesn't really play around in the tech stock world. He really only sticks to consumer staples, insurance companies, railroads, infrastructure, industrials, things like that. And he pointed out that those parts of the market are very expensive. And it is. I mean, tech is also arguably not as expensive in some ways. Like, there's more earnings growth on that side of things. But I totally understand the plight of, there's not a lot of cheap stocks out there. With the market doing this sort of thing, I think stocks are hard to buy too. Like, I'm waiting for dips, and from a longer term and a shorter term perspective. Anyways, I've ranted enough on stocks and that sort of thing. So let's get into some stuff here. Nasdaq's up 0.74%. Of course, drafts for a potential end to the war have surfaced in regards to latest news. That's, of course, going to be very positive to the developing story in the Middle East. I think there was some kind of ceasefire as well with Ukraine and Russia. So geopolitical tensions cooling off, of course, goes right to sending oil lower. So let's talk about this. If you've watched my channel in the last few days, you know I have been long oil. I did get taken out on that idea. So I took a loss on that one, and it is what it is. On to the next trade. From a perspective of whether or not oil is going to go lower from here, of course, that still depends on how the headlines develop. A draft for a, end to the war is nothing written in stone, but it does seem to be enough in the market's eyes to kind of be like, all right, we're putting a bow on this. Now, granted, do I think oil price is going to drop straight back to like 60s and 50s? For me, the answer would be no. But we'll see. Iran has rejected such proposals in recent days. Again, I think kind of the fair way of saying it is, it seems like there may be negotiations going on, but nothing is in stone. And we've seen this story a couple times. So I recognize that there could be a circumstance in which a bit of a fake out is going on. Oil prices drop. I get whipped out of my trade, and then it reverses higher. And hey, you know what? It's part of trading. So if it happens, it happens. I do think that, when it comes to oil, a very bullish development would be if you see this super long wick turn green, and that would be unexpected, but it would show we're likely going to keep ripping higher on oil. So I'd look for that. If that happens, I may rejoin the trade. I'll keep an eye on it today. Gold is up pretty nicely today. Of course, just throwing people for a loop in 2026, the geopolitics stuff has actually been a much more bearish thing on gold due to the shock to interest rates, which I'm not surprised to see yields are lower, but they are bouncing today. So yields came down, gold liked that, right? ADP numbers also came in a little bit softer than expected. Let's see if we have ADP. It might not have loaded yet. Yeah, nothing just yet. Let me just check and see if we did get it. Nope, not yet. So we'll have that data shortly, but ADP came in just slightly softer than expected. And so gold is up. It's got some good economic data to some softer jobs data, as well as yields coming down off of ceasefire stuff, right? Oil prices coming down means less inflation, interest rates may get cut sooner. Interest rate cuts are very bullish for gold. That's the story. But we'll see. Gold from a price action perspective looks nice. You have a little bit of a turnaround taking place here. This downward structure that we've seen in gold for the last few weeks, at least showing some promising breakouts to the upside. These are very green candles here. So let's see if you get this kind of break retest. I am not personally looking to get long gold. I still have a modestly more bearish outlook on gold in the here and now. If we flip over to our gold scorecard here, you can see that it's really the fundamentals. Now, this will actually flip a little bit more bullish once this data updates with an edge finder. ADP did come in slightly worse than expected. That's going to be positive for gold scoring here. So keep an eye on that. But still, overall, the big question of the week is, how does NFP fall, right? If NFP falls in a way that is a weak jobs report, that would be something in which case maybe you've got a little bit more of a bull case for gold, right? Weaker jobs would be welcomed by gold. Gold has been under pressure partially due to the fact that, the dollar has been strong off geopolitics and inflation expectations going up, but also because the jobs market has been upbeat relative to expectations. It's been a positive developing story for jobs data recently, as opposed to what was a declining story. It's at least recently showing some promise. So if you're a gold bull, you want the jobs report to come out weak on Friday, show some weakening in the jobs market. That would be more of a bull case for gold. But right now, I don't see that taking place. Technicals seem to be showing signs of reversal. This may flip bullish, so we're going to be very neutral on gold with a disagreement between technical price action and fundamentals. So for me, gold is still on the sidelines, but I'm going to watch it close just in case you get a large reversal in jobs data this week. If it becomes a weak jobs report, could start to showcase a more bullish case for gold. So keep your eye on that. We already talked stocks. Dollar index, if you take a look here, see how this is reacting here today to geopolitical stuff. Of course, dollar index is lower today off that. No surprises there. Down with yields, right? Yields and dollar going to be kind of attached at the hip right now, as the focus is very much on inflation expectations. So if you're watching dollar index, the more bearish story would be if you get a more decisive candle closure. Now, this sort of thing could take place if you're looking at gold and you're saying, is there going to be a more sustained breakout to the upside? Well, the answer is probably in the jobs report and the dollar, right? So let's just say, let's paint a picture in which case the dollar sees a large one-day decline in response to the NFP report. If you get that kind of candle, that would signal to me that the dollar may actually be headed back down towards its lows around 96 or wherever it, stopped, like 95.75 or something like that, right? So we may be seeing, depending on how the jobs report falls, some juice there, some catalyst for a further decline in the dollar. But to me, it's too early to call, and we could also go the other way, right? So I know I'm talking out of both sides right now, but to be more straightforward, I'm very neutral on the dollar. I don't have a strong bias on the dollar at this time. I'm very, very much just going to wait and see what happens with the jobs report to make a more decisive opinion on the dollar index. So I'm not really interested in going into NFP long or short on the dollar. So I have no open positions on the dollar at this time. So nothing there for me. We could go either ways. If we take a look at one that I like more, the Australian dollar. I'm long Aussie Swiss franc. This one is actually working out pretty well. We've got Aussie Swiss making a move higher. I hit my first target on this trade. I do like the Australian dollar. We talked about it yesterday. I'm still bullish the Australian dollar. And when we talk about setups, right, I have varying degrees of conviction about different ideas. So if you ask me about the dollar, I'm just going to say I don't have a bias. The Australian dollar, I'm a buyer. And this gets way more interesting, right? If you're watching my content, I imagine if you're listening, it's a lot more interesting when I have something on the watch list that's actually conviction, right? I actually have a bullish bias on the Aussie dollar. A lot of trading is very, very boring and a lot of waiting. So, if you're somebody who only trades gold and watches my channel, like there's going to be times where it's really interesting to watch my channel for gold analysis. And there's going to be other times where hopefully not, but I might frustrate you just by being really, it could go either direction. So when I look at Aussie Swiss, the reason I like the Australian dollar is that growth metrics have been solid. And recently, their inflation numbers have been a little bit softer than forecast, but at least from an actual perspective, high levels of inflation are keeping yields elevated in Australia, right? Because again, central bank there, the RBA, signaling still a need to keep the brakes on in regards to keeping monetary policy more hawkish, more restrictive. So I do like the story there. We also see institutions very long the Australian dollar futures contracts and adding more long exposure in the latest round of commitment of traders data. I like seeing this. So when I look at the Australian dollar, I'm trying to look at both an institutional activity lens. I'm looking at the technicals, which look solid. Crowd sentiment, actually seeing some bearishness. Aussie pairs, let's look at that. I haven't been looking at this. I need to look at it more often. Crowd sentiment, retail sentiment. And can we filter for Aussie pairs? Well, I can at least do this. I'm going to do major currency pairs, minor currency pairs. Okay, so what I wanted to see here, yes, I need to add a filter. I can totally do that. I can do a search bar. I'll add that, I think. That would be super useful for this page. Let's do this. That's gonna frustrate me. Anyways, I'm gonna write it down because I want to. Hold on. Today, search bar, retail sentiment. Is do a lot of you guys use the retail sentiment tab? Anybody like this tab a lot? I used to look at it a lot when I was very heavily trading currencies in like 2022, 2023. I used to look at this quite a bit. Anyways, so if we take a look at this, we can still kind of get the gist of it. Aussie CAD, Aussie Swiss, Aussie dollar, Aussie Kiwis neutral. Let's see, any Aussie pairs up here? Euro Aussie. Okay. And pound Aussie. This is perfect. Check this out, guys. So when we are looking at the Australian dollar, we can see a very heavy crowding of retail sentiment being bearish the Australian dollar. So if we take a look at this, right, the Australian dollar, we're getting a contrarian bullish signal because most positions are bearish the Aussie, right? And then flip it around when we look at pound Aussie and Euro Aussie, crowd sentiment is to buy these pairs, Euro Aussie, pound Aussie. And so we're getting a contrarian bearish reading. That is showing you that crowd sentiment is pretty strongly bearish the Australian dollar. Very interesting. So if I look at the Australian dollar, that makes me more willing to be a buyer personally. Why? Because if crowd sentiment, typically retail traders are going to be on the losing side of great trends. It's just an unfortunate reality. Typically, retail is trying to short this and they're trying to buy this. And we saw a perfect example of that looking at our retail sentiment tools here. Let's look at the other one, Euro Aussie, right? We've talked about this one over and over. Euro Aussie, crowd sentiment is trying to buy this pair. Meanwhile, this pair is just declining and declining and declining. So this has been a really nice short opportunity rather than trying to do what the crowd seems to be wanting to do with it, which is to buy Euro Aussie, to buy Pound Aussie. This is a really powerful tool. It's a really simple one, retail sentiment tool. If you don't have access to Edge Finder and you would like to try out the tools that we have here that we talk about on the streams and videos, we'll drop a link here in the live stream chat to where you can sign up for a trial. Two things if you fill out this form. Number one, you can get access to our free fundamental analysis and Edge Finder course. So even if you never purchase the Edge Finder, or maybe you plan to buy it in another year or so, I don't know, try this out. Use this form, fill it out. It will email you a copy of the Edge Finder course, as well as our fundamental analysis courses that we offer, totally free. So I'm not joshing you. It is literally a free course that you get on how to use Edge Finder, what it all means, fundamental analysis, etc. No credit card, no nothing like that, no strings attached. And what our goal is, fully transparent, is for you to check out our tools, to learn about fundamental analysis and realize how powerful this stuff can be, so that eventually you choose to purchase a copy of Edge Finder. That's the full funnel. I mean, there's no hiding the goal there. We offer some really great tools for traders. Give us a shot. Try it out. I'm telling you, we have changed the trading paths of thousands of people. It is a really, really fun project that we've worked on building these things. And we have thousands of people around the world using Edge Finder to improve their trading. So take a second, try it out. There is a clear path to building a better approach to financial markets using fundamental analysis that we have tried to make more and more accessible to the average trader out there. So take a second, fill out that form, get a copy of our free course, and potentially purchase the Edge Finder in the future. Okay, so that's a good little bit on currencies. I would say the Australian dollar continues to be my most interesting currency pair. I do have one other pound CAD. I also have a long position here. This one has been a barcode for the last, my goodness, the last like week and a half. This thing's gone nowhere. And it's really not gone anywhere even from my entry point. We're up a little bit on the trade. I would like to see this thing make a larger sustained move higher. But if it breaks lower, it is what it is. I'm kind of just wanting it to make some sort of decisive move. I do like the technicals, right? We've broken this downward structure, moved higher, pulled back into this area. I was kind of thinking we would get a nice, reaction from this area. We've held steady. We just haven't made a decisive move in other directions. So, yeah. Can somebody spot me some gas money? My man, how did you get in here? Anyways, we'll see what happens there. Gold, again, I know we already talked about gold, but gold is actually starting to show some movement. Shout out, by the way, to Marco in the chat. He is long Bitcoin, and I sent him a message today because my envy was burning. I really wanted to be long Bitcoin. It was a setup that I really liked, and I know this is going to sound like I'm making this up, but I was looking at buying Bitcoin during that Fed Day meeting, which was like right here. And I know I've already complained about this before in a video, so I'm just going to complain again about it. Price came down to that level, and I was like, okay, I'm going to enter. But by the time I was, getting ready to click the buy button, the thing had bounced, and I was like, okay, well, I'm just going to wait, see if I can get that re-entry. We never did, and this thing has just ripped without me. So little bit of a painful subject for me, but Bitcoin looks fantastic. I hope someone else is catching it other than just Marco. Marco's got a runner on it. That's fantastic. And I think Bitcoin can keep going personally. Like this chart looks really good. These are like my favorite setups, is when you have something that's in a very prolonged downtrend, then the macro starts to shift, then the technicals start to break out. That combination, that's the sweet spot. And we have that going on in Bitcoin's reading, getting a very bullish reading within Edge Finder, +9 score. And I just narrowly missed my entry on this. But fantastic setup. Congrats to anyone who is long or caught this move in Bitcoin. I think it has legs to it. It's a phenomenal move. From the lows, you're talking about 37%. I mean, that's pretty incredible returns there. Now, of course, that's if you caught the lows, but even if you caught the pullback here, that's a 9% move almost in just a couple of days. So, ouch, Nick, been there, done that. It hurts. No fun at all, right, Simon? I mean, I said it at the start of the show. At the end of the day, the reality is that's trading. Like, you're going to miss trades. You're going to miss setups. I've got a couple of those going right now. Like, to be fully candid, it is a little bit frustrating. Like, I've been bullish risk on assets, and I've participated in the sense I've been buying stocks. I've sold cash secured puts, but I didn't quite get the positioning on that I wanted to because we didn't really have any pullbacks. And you might say, well, Nick, next time, maybe what you should do is you should just buy the breakout and be more aggressive with it. I hear that voice in my own head. I don't need you telling me, okay? Here's why. The next time it happens, the next time it comes around, let's say you just buy the breakout more aggressively. You say, I'm going to buy. I don't care. I don't want to miss this. Every time, it rallies like this, it goes up every single day and I miss the move. Okay, I hear you. But the next time, it may not do that. The next time, you may be hating yourself because you bought the breakout right as the thing was getting ready to pull back and move lower. You can always run in circles in your head. And one of the most dangerous habits of traders is recency bias, okay? If you look at this as your sample size, clearly the only strategy that works best is to buy it every single day, and regardless of what it's doing. But you can't do that. You can't make future trading decisions just on this one example. Let's picture, for example, 1,000 examples of a breakout like this. And let's make a logical decision as to what may be the right way to play this move out of the next 1,000 times it occurs, not just this time. Because I'll tell you, this is incredibly rare. Do you guys realize that this 1 month period is the best return that we've had since April of 2020? I can't tell you how incredibly rare that move is. Now, does it make me, even feel worse that I missed part of it? Absolutely it does. But I'm telling you, logically, next time, I'm not going to do anything different. I'm not going to change what I'm doing just because of this one incredibly rare outlier move. I'm not going to change everything of how I trade the markets because I missed something, right? That's what new traders do. And they run in circles, changing their strategy to fit whatever happened last month. But you can't do that. You have to study what's happened the last 1,000 times so that you can employ that strategy the next 1,000 times, regardless of how one particular example worked or didn't work. Okay? Think in a template style, not in a, absolute certainty style. Okay? Template this stuff in your head. I know from my own studies, back tests, etc., I'm better served waiting for those pullbacks most of the time. Most of the time, the market moves in waves. Very, very rarely does it move like this. And if you change everything the way you're doing it because you see this move, you are falling victim to recency bias. Okay? I hope that helps. You can call it copium if you want. It's a little bit of cope. I only cried for 30 minutes about this last night. And with that said, just a reminder, take a second if you haven't already. I dropped it, or the producer dropped it earlier, but access to our Edge Finder course, as well as a trial access period. If you're interested in 30 days access to Edge Finder, we'll send you some information. Click that link right here. Up next, we have Marco from Marco's Trading Journey, who I hope you stick around and listen to him talk about Bitcoin because, I'm going to live vicariously through his Bitcoin trade because my goodness, that baby is a runner. With that said, up next, Marco from Marco's Trading Journey taking over the stream. Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show.
Hello. Welcome to my segment of the live stream. So as Nick mentioned, I did manage to catch the Bitcoin trade, which is working out pretty well. So it's following the risk-on scenario. It's nowhere near my target yet. So we're going to see if we can go up a bit more. My first target is around 90, but I would say I would probably take profit around 95, 96. I'm looking at this sort of swing high level to get in. Or sorry, to get out of the position. I am trailing the stop loss, so I have moved the stop loss from 69957 to 74451. So didn't lock in any profit yet, but we'll probably move it a bit more if we get a bit more of a move. So we're getting a lot of developments this week. Markets are moving a lot. Markets are getting pretty volatile, which is great for us traders because we have steady trends. And I think oil is going ham. So oil was going crazy, just focusing on Brent here because Brent is a better indicator of the Middle East conflict. So Brent had a big retrace or a big drop, and now it retraced almost half of the candle. I also want to mention there's going to be a new format for the DNA funded giveaway. So if you want to participate in the DNA funded giveaway, your first step is to join the A1 free Discord. So I will post the link to join the A1 Discord right now. Let's copy this. In the comment section of the live stream or in the description of the live stream, you'll find the link to join the A1 Discord. Once you join the A1 Discord, search up the channel that is called giveaways. Okay, so it is called giveaways, and in that channel I have the link for the form to enter the giveaway. Okay, so we're doing it a bit differently. We're going through the through the A1 Discord route, and you can access the giveaway in the server. Okay, so the link is in the comments. Check it out. So massive developments today or this week in general. I think if we go to breaking news, we had US and Iran closing in on a one-page memo to end the war. Personally, I think that's not going to happen. I think that is not. I think that is kind of fake news. Just looking back at the whole 6, 7, or 8 weeks in the past, I think there has been a lot of exaggeration. I think there's been a lot of fake news circulating. I think there's been a lot of calling that the war is over, especially by Trump. And I don't want to jump the gun just yet. I can see that the markets have reacted for sure. I mean, oil prices dropped heavily. Risk on flying. So risk on doing absolutely great. Gold going up as well. Gold looking pretty healthy here. I have a buy position on gold. No, it's gold against the euro, but it's in profit. This is the DNA funded challenge, by the way. So a lot of moves. Looks pretty nice, but let's try to filter the best stuff on the list. And of course, if you have any requests, make sure to put them in the comment section. Why is UJ bearish? That's a good point. That's a good one to discuss. So I didn't see any talk about a possible intervention. We did get a massive sell-off today. So we got another big drop. It probably was an intervention. I mean, it was a pretty quick, pretty big drop, but could it maybe coincide with something else? Let's see. If we jump onto the 1 hour chart, this is going to be 6 in the morning. When did oil move? Oil started to move at, well, it didn't really move at 6. What about Brent? No. So essentially, this was most likely another intervention, and a big one, I would say. Second biggest one in the last 7 days. So this was the initial one. This was the second biggest. Then we had this one, and then you had the fourth one right there. This maybe was another intervention. I'm not exactly sure. The market doesn't seem to be continuing with the overall kind of sell-off. The downtrend doesn't seem to be starting just yet. We're getting these massive wicks, massive sort of rejection of the 155.5 level. Yeah, 155.5 or 155.0. Let me just see if I zoom out a little bit, what could be a good target here? Well, if we do get a downtrend, I think we can go to 151, somewhere in this sort of area, if we actually get a downtrend out of all of this. If you are in the A1 Discord, you would know that I was looking for a possible sell setup. Briefly, I actually had a sell limit at 157.4. I decided against it in the end because I didn't have enough confidence, and I was seeing the interventions not really having a lot of follow-through. So the interventions kind of, the first one worked, second one not so much, third one definitely didn't work, and now the fourth one, well, we're going to have to wait and see. So far, there hasn't been a continued sell-off. You had the initial drop and then kind of flat price action. What is interesting is that Financial Juice didn't really catch the intervention. I don't see it anywhere. Is it this one? No, this is May 4th. So the whole event seems to be missing from Financial Juice. Now, of course, no one can be exactly 100% sure if this was an intervention or not. I think only after a week or a couple of weeks, the Bank of Japan or the Ministry of Finance, they come out and they say that they did an intervention. So this is speculation, but just by the nature of the candles, it seems that it's an actual intervention. Now, it also looks a bit different than in July 2024. Let me just show you. July 2024 was here. This was sort of the last big intervention. And here, okay, well, maybe initially there wasn't a lot of follow through, but then we broke lower and we continued to sell off. So we could still see some sort of a scenario such as this one. This looks pretty similar to the latest price action, wouldn't you say? Okay. So let's exit the replay. Let's look at the current price action. Yeah, kind of looks similar. So we can still get a break of the level. It could still happen. So we're gonna have to wait and see. Am I looking for positions right now? Not really. Right now, I'm not really interested to look for a sell setup. I'm gonna have to do a bit more research, a bit more reading, see what the experts are saying, especially Brent Donnelly, because he is a currency veteran and he has been trading these interventions for a long time now. So he's for sure gonna share some clarity about this. And of course, if I find anything interesting, I will update you in the A1 Discord. Oil price is too high. Trump tweets just so he manipulates oil to drop. War resumes on the weekend. That kind of does seem to be the pattern. Hey, Mark, could you look at ISRG? I can, but I'm not sure what the hell that is. I don't trade stocks. I don't even have access to trading individual stocks. I have a small interactive brokers account, but it's mostly for long-term buying of the S&P. So I can't really help you much on stocks. Price action here, I mean, we did a round trip. I can see from the gap up in October, we essentially did a round trip back to these lows. If we zoom out a bit on the daily, let's say, there's still a major uptrend for sure. So just going off of technicals, this still looks bullish on the longer term. But I don't know anything about this company, and I would definitely not be looking to trade solely based on technicals. Maybe we can look at the stock box. Let's see if we go to the stock box. I recently acquired the stock box, or Nick gave me access. So if we can maybe find the ticker here, let's see, ISRG. Okay, let's take a look. Whoa, that's a pretty good score. Score of 10. So probably a good buy. Of course, not financial advice, but most of the data seems to be coming out bullish. So chart looks okay. Chart looks fine. Stock box is bullish. I would say it's a pretty good thing to consider. As far as individual stocks go, what I like the most is GOOG. I know the score is not super high. It is bullish technically, so it's a 6, which should be bullish. But I just think Google is so good. Of course, it's not pulling back. It's just exploding higher. So I'm going to have to wait for a pullback. But if you want to bet on the artificial intelligence race, Google is kind of a safe play because they are already getting a massive amount of revenue from their old business model, from YouTube, from Google, Google Lens, Google this, Google that, Google Workspace, and all of the stuff that they're selling. And they could be getting a lot more revenue if Google Gemini works out. While the competitors like ChatGPT, Claude, what else do we have? Grok. Okay, Grok is Twitter, so that's kind of more similar to Google. But ChatGPT and Claude, they don't really have any revenue sustaining them. They need to make revenue through the current business model. They don't have an old business model that can get them through the tough months. Google has, we know they have a bunch of money. They have a bunch of revenue. They have a bunch of money. They are the ones that could come out as one of the winners. As far as the artificial intelligence race goes, I don't think there's going to be one winner that's going to beat all of the competitors. I think there's going to be chatbots that each specializes in something different. So Google Gemini could be the general chatbot. Claude could be the chatbot for research. ChatGPT could be for, I don't know, for medical stuff, let's say. Of course, that's not based on anything, but you can have a bot for engineers, a bot for doctors, a bot for this, for that. So that's how I personally see this whole thing playing out. What's up, Marco? Is the Bitcoin halving cycle over? No, it's not. It's going to be over in November. So the buy position goes against the halving cycle. But I'm not targeting all-time highs. So I'm not trying to be crazy bullish. I'm just trying to get in on a rally on the risk-on market, risk-on environment that could be near 100K. So I think we can hit 90-something, at which point I will, of course, take profit. I do want to post the link to the A1 Discord one more time. So do remember, we have a new segment or a new sort of giveaway style where you need to join the A1 Discord first. Link is in the comments. And then in the Discord, you need to find the channel called giveaways. In that channel, you will get the link to apply for the giveaway. And then, of course, I will copy all of the names in 10 minutes and I will spin the wheel to find the winner. I do want to remind you also, if you are looking to get funded, do check out DNA Funded. So we have a discount code for you. The discount code is A1 Live. Gets you 25% off any DNA funded challenge. Okay, so A1 Live, 25% off any DNA fund challenge. This is my personal 25K two-phase funded account. I'm currently down around $560. So the equity, I'm down, what is it, 2%, something like that. I have 3 trades running. I think all of them are in the green. Yes, they are. So that is pretty good to see. And this challenge is purely traded by ChatGPT. So past phase 1, past phase 2, and now I'm doing the funded stage and of course trying to get a payout. I've had a great experience so far. There's a big broker behind this company. Their support is pretty fast. I know I talked a little bit with their support and we resolved everything pretty quickly. What else? They're using TradeLocker, which is pretty great, in my opinion, the best software for execution. And your profit target automatically closes all of your positions. So if you're running free trades, you don't need to manually hunt the profit target on the challenge phase, but all of your trades get automatically closed and you automatically pass if you hit the profit target. So it may not seem like much, but trust me, once you're going through the challenge, it does save you a lot of time and a lot of screen time as well. So yeah, check it out. Code A1Live, 25% off. What else do we have? Marco, I think EuroCAD is good to mean revert back to swing lows, especially if the data supports it. Let's take a look. EuroCAD. I guess you mean the lows at 156. Let's see, Edge Finder. Trading Edge Finder. I guess we should be getting a bearish reading then. Let's see, EuroCAD. So EuroCAD is getting a score of 0. Something may be broken here, so I'm not exactly sure. But I think it's a score of 0, in which case I personally would not be interested to do anything on the EuroCAD. Euro as a currency, I don't think is super strong. CAD could be a little bit stronger. So just from my personal research, yes, there is a small bias to sell the euro, buy the CAD, but I would of course be waiting for the confirmation from the Edge Finder. You gotta love Marco and James stock analysis. Yeah, it's a pretty bad analysis of stocks. At least my analysis. I'm not sure what James is doing, but I'm from Europe, so my stock trading is super limited. I can't even do anything with USD stocks. Like on my interactive brokers, I only have the European shitty counterparts to trade. I can't even buy the S&P. I have to buy something else, something for us Europeans. So it kind of sucks, but we need to adapt. You know, I'm not here to complain. I'm long oil. Okay. I mean, personally, I wouldn't be doing anything on oil. I don't think your edge is big in trading oil. I think this is purely controlled by geopolitics. I think it's also controlled by fake headlines such as this one. Okay. And Trump wakes up one day, decides to end the war. The next day it's back on. Iran, no one knows what the hell is going on in Iran. You know, their whole leadership has been wiped out. So the new guys have to all get together and basically negotiate first with each other and then with the US. So it's a pretty bad situation. And again, I think your edge in trading oil is pretty close to 0. Intel, let's see, Intel, is something going on there? Intel. I'm not sure what the stock ticker for Intel is, so I can't really take a look. Is it maybe INTL? Nope, guess not. I have big buy position, big money, oil, big Atlanta style money. What's up with Atlanta? Do they have a lot of money in Atlanta? Marco, GBP CAD, any insight? GBP CAD, take a look. Flat, super boring in my opinion. GBP CAD, not something I would personally be looking for. Yeah, something is up with the score. Something is up here because it's 1, -1, so -2, +1, it's -1, -3, -1, 0, -2. It should be -2. Something is up and it's gonna get fixed pretty soon, so don't worry about it. But I can't bring up any sort of any scores at the moment. Hey Marco, do you think a buy is worth at these levels? Euro dollar, GBP/USD. You can do much with interactive brokers. I'm from Europe. You need to go to permissions to activate them. Yep, I know. But I still don't have full permissions, or I can't really trade the same ETFs or CFDs or whatever it is. I think it's ETFs as the folks in the US. For the S&P, I need to buy the Europe alternative. I studied geopolitics. What is happening to the GP weakness despite very good fundamental data? Intel, INTC. Okay, INTC. Yep, you got it. Okay, looks awesome. I guess it's benefiting from the new restarted artificial intelligence race. I'm guessing NVIDIA is flying as well. Not so much. But Intel looks great, looks awesome. What I would personally do here, I would wait for a pullback to the 20 MA. I would not buy the all-time highs. I think that's a pretty dumb way to go. But waiting for a pullback, a bit of a correction, I would say is pretty smart. Let's see what the stock box has to say. It's probably going to be bullish. If we go to top stocks, ticker INTC. A score of 4. So you need a 5 for it to be a bullish score. 4 is okay. 5 would be even better. So I do like Google a bit more. I think with Google, you get direct exposure to artificial intelligence because Google Gemini. With Intel, it's a bit different. Intel builds the hardware for artificial intelligence. So it still massively benefits the story, but it doesn't have a direct chatbot. So up to you. Let's do the giveaway. So let me copy all of the entries. 1 second. Today is the 6th of May. So let me take a look at the 6th of May. 6th of May. Okay. So I have the names. Let's put them in my wheel. In. Let's see. Camus looks like Camus is the winner. So congrats. It's going to be a 5K one-phase account, and after my segment ends, I will send you the code for the free challenge. And I just want to remind you, if you want to get funded, A1 Live gets you 25% off any DNA funded challenge. Okay, so A1 Live, 25% off. I still have 4 more minutes left. I bought Intel, awesome. I'm up big money, awesome as well. I'm in Europe, I can buy the S&P, maybe try an ETF. I do have the ETF, but it's a European ETF. So my S&P is quoted in euros. It's not quoted in dollars, it's quoted in euros, which means it barely moved in the last 1 year because the euro has been massively outperforming the dollar lately, right? From, let's say, November 2022, or let's say just from Jan 2025, the euro has been massively outperforming. So if you bought the European ETF for the S&P, your returns on paper are really small because your S&P is quoted in euros. Nick has a long position oil. How do you ever use neutral readings on Edgefinder to play mean reversion? I personally don't play a mean reversion strategy using the Edgefinder. I mainly use the Edgefinder for trend following. So I can't really talk about mean reversion. Only time that I use mean reversion is if I have some sort of an edge, some sort of a economic data print that tells me the markets are wrong, the move is overextended, and we're gonna mean revert back to a specific level. So I do sometimes trade mean reversion, but only if my edge is really good and if I have some sort of piece of information that is telling me the move is overextended and we're gonna mean revert. Hey Marco, we missed the joint segment with Alan. Alan is traveling this week, so joint segments will be back next week. I missed them as well. They're super fun, but it's gonna be back next week. I'm buying exactly what Nick buys. You need to check providers of the ETF and countries. Explore them. You will see how it works. Okay, maybe. Are you by any chance in the UK? If you're in the UK, then you do have some extra options. But I'm gonna look into it. So thank you for sharing. AMD moving as well. Really? I know there was some chatter about it in the A1 Discord. Okay, it's going crazy. Intel, AMD going crazy. I don't know why. My first guess would be artificial intelligence. My second guess would be earnings, but I'm not a stock person. I don't closely follow stocks. One big reason why I don't follow stocks is on most prop firms, you can't really trade a lot of stocks. So on FTMO, for example, I have FTMO accounts, I have an Alpha Capital account, I have a Darwin X0 account. Most of those, they offer maybe the 5 or 8 biggest stocks in the US. That's about it. So I'm pretty limited when it comes to stocks. What is happening? GP weakness. Okay, so Robo is in Spain. Okay. I'm gonna look into it. Thank you for sharing. So I have 1 more minute left, and then we have the next guest coming on. It's gonna be James, I believe. On the watch list, I have Bitcoin, which is running nicely. I have the Nikkei, which is looking really bullish. I'm looking for pullbacks. So I'm looking at the 20 EMA to get in, and I'm looking at the Nasdaq. So I'm looking at the Nikkei, I'm looking at the Nasdaq, I'm looking for the pullback to the 20 EMA. I think the best play at the moment is equities. I think your edge is the biggest in equities. So if I had to rank it, I would say the best thing to trade right now is equities. Second best is crypto. Third best is currencies. And the fourth one would be gold, silver, copper, platinum, because they just look like crap. They look pretty range bound and corrective. That's it from me. Thank you very much for watching. I will see you tomorrow, and don't go anywhere because you have James coming on in 30 seconds. So good luck. Goodbye.
If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream, or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Hey, how is everyone doing? Happy Wednesday, ladies and gentlemen. Hope you're all well. Hope you all had a good weekend, although I'm a bit late. We're already halfway through the week. Okay, so positions wise, I decided to take a little bit of a short on gold. Nothing too heavy, nothing too crazy. I've got a stop just at the sort of previous swing high. Depends how you know, however you mark up your fibs. In my book, we've got this bearish leg, draw from the high to the low, looking at this retest of previous structure on the left, pull back into the 50% retracement zone, pull back into the 200 moving average, and the RSI is a little bit overbought at this point as well. So I'm just looking to see if we can get some further downside. Now, it's a little bit risky because obviously we've had de-escalation talks regarding the Middle East. So it's definitely not the most solid trade by any means. But I was looking at the technicals; they all look good. The Edge Finder isn't necessarily bearish, but it does have a score of -4. So again, it's not super strong, but I am willing to take a bit of a go. And if we end up reaching my alert, which is right here, so basically around these previous highs, I'm going to cut 50% of the trade for a loss and just let the other 50% run and see how it goes. So we'll see. But yeah, not overly interested. Much a little play, see how that one goes. Aussie New Zealand almost stopped out. So yeah, very close to ending my run in this market, unfortunately. So currently all our stops are trailed. So profit locked in on the first trade, profit locked in on the second, and the third one here is break even. So worst case scenario, we exit. Definitely not with as much as a return as I would have liked, but it doesn't matter. It is what it is. There's nothing I can do about that. So just waiting to see, can we see a correction back to the upside? Can we finally clear out these highs and start printing new highs? Or are we going to see some further downside from here? Now we've had the RBA hike. Yeah, we'll see. Australian dollar Swiss also continues to run. So again, very simple trade on this one. Fib from the low to the high. Pull back here into the fib zone as well as previous structure, providing that really nice break and retest, bullish trend. And now we had that lift to the upside this morning. I'm fairly sure Aussie Swiss is also one of the bullish, one of the most bullish. Yes, the most bullish, actually. So Aussie Swiss here, very bullish, score of 13. Absolutely fantastic. Cannot complain with that one at all. But yeah, that's all I've got in terms of my portfolio. Actually, I'll tell a lie. Hold on. I am still in SSLM, which is physical silver priced in sterling. So still sat here with an average price around, let's say 5.6, just to keep it easy. But yeah, that's it. So pretty light on the positions. I was long on oil. So I did go long. Hold on, where was my position? Somewhere around here. So yeah, this was the trade I was in. So I was long oil here. We had initially quite decent profit, nothing wild, but then obviously we had those de-escalation talks. That was the headline I was just mentioning, and we decided to plummet to stop loss. So that was fun. But yeah, there's not much else to discuss on my side. I missed giveaway for second time. All you can do is keep entering. You can't lose if you don't quit. At least that's what I was told at the casino. Leon, hello. Sluggy, good to see you. Did I catch Euro Aussie? I didn't know. I'm not really in anything. I've not really been too active, to be honest, in terms of taking trades or doing anything. I'm working on some other things right now. But yeah, I just don't really see anything really here, to be honest. I still quite like the idea of being a buyer of the Aussie dollar, but I think its advantage is starting to fade a little bit. So let's just see, what do we have here? Yeah, there's not too much. I suppose if I was going to enter from, if I was looking to enter now, it would be something like this. So I'd be looking, obviously, this previous structure on the left. We've had the break. I'd be looking for the retest, pull back into the fib, meet the 200 moving average. RSI becomes a little bit higher, and then potentially we could execute a short from there. But yeah, it's not high up on my list of favorites at the minute. Views on yen, I don't really have any. It's still got low rates. I think it's still a pretty decent buying opportunity. I'm not doing it. I don't like the yen. Every time, or almost every time I trade the yen, I get burnt. So I'm not even going to bother trying to trade it. But I would say that overall, it makes sense to still be a buyer. It's still a great carry trade. The yen is still fundamentally quite weak. So yeah, I mean, that's all I've really got for you at the moment. Let me just see if I'm missing anything. Let me just check. Let's just check my notes. Bear with me. So despite possible MOF intervention last Thursday, driving US dollar yen, MUFG doubts intervention will have lasting impact given the fundamental backdrop remains conductive to higher USD JPY with straightforward moves still closed. This was old, obviously. And risk skewed further to crude. Yeah, so I don't really have anything for the yen specifically. What's happening to GBP weakness despite very good fundamental data? Let's just take a quick look what is going on. So yeah, pound strength on CAD. I mean, to be honest, I wouldn't really say we're seeing any significant weakness across the pound. Let's just see what yields are doing really quick. Why do my yields not load in? It's really frustrating. Annoying. Anyway, we are seeing yields take a little bit of a dip. So obviously we had the MOF intervention. We've had some de-escalation headlines as well. So yields are cooling off a bit. So if we account for, what's been happening regarding the higher oil, higher inflation, if that's now starting to get priced out of the market, we're going to see inflation expectations start to tick to the downside. We're going to see yields slightly down, and that means that central banks can largely start going back to what they were pre-war. So it might just be a little bit of a repricing in the market, but again, I don't really see much sterling weakness, generally speaking, here. So happy about Intel at 40. That's good. I'm happy for you. Well done. Sluggy bought dollar Swiss today. Okay, let's have a look at dollar Swiss. Yeah, I don't know. I'm not seeing anything for the way I trade anyway. I mean, actually, if you bought this morning, I'm sure you're in some pretty decent profit, depending on exactly where your entry was. Let's see. I'm going to ignore the top setups page because I think it's having some issues. I think Aussie New Zealand's also not reading on there. So I'll just go directly to the scorecards. So Aussie Swiss is getting +4. So technicals bearish, sentiment's bearish. However, the economics are all bullish. So growth, labor or jobs, and inflation are all bullish, which is good. So fundamentally, looks fine. Let's just go back out to higher time frames. I think there is still room for potential downside if we're just looking at these monthly levels. So we've obviously got these lows over here. I wouldn't put too much weight on that. The weekly looks awful. The daily looks awful. The H4 looks okay, but technically in a bearish trend for me. And the H1 is also in a bearish trend. So I don't mind the idea, Sluggy, on paper. However, actually executing on the chart, for me personally, I don't see it. But I do wish you the best of luck. Not that you need luck. I was looking at that too, but want to wait for NFP. That's a very sensible idea, MSG. Okay, so what else do we have? Bitcoin seems to be doing well. I think Marco said he was in Bitcoin. So yeah, nice catch for him. Unfortunately, my overcautious behavior has kept me away from Bitcoin, which is obviously biting me in the ass a little bit here, but it's fine. It's not a market I'm overly comfortable with, so I'm happy to sit out. With that said, I've just noticed we are now at this 200 daily moving average, and the RSI is a little bit overbought. So if you are wanting to be in Bitcoin, but you missed the recent move to the upside, there might be a pullback coming. I'm not saying that's definite, obviously, but I would say the base case here is we have some sort of retracement, whether it's just back to this previous high, back to these lows, I don't know. But I wouldn't expect Bitcoin to now collapse to 50 straight away, but I would likely expect some sort of pullback. And then we have the deciding point. Do we break back above this 200 daily moving average? Or are we now setting the tone of this is now dynamic resistance and we are ready to come back? And this has actually just been a bit of a pullback within this larger downtrend. We'll see. Excuse me. We'll see. Again, I'm not really a Bitcoin guy, so don't take my thought process too seriously when it comes to this market. Euro Aussie 1 hour time frame shorting now. It's a very presumptuous thing. Let's see. I suppose you could make that argument. It depends on your own analysis. So yeah, I suppose if we really forced it, we could say this was the previous high. I think that's a little bit aggressive for my take, but there is the argument. So if we do this, we measure the most recent bearish move here. This is a really nice pullback into fib. We've seen a really nice sort of price action development from here, double wick to the upside or pincer, whatever whatever the technical guys call that. And now it looks like we're on our way to close, or at least have a engulfing bearish candle here. Although we are only 10 minutes or 13 minutes into this candle, so we'll see. I think if you are looking to be a seller, what I would want to see here is this candle close below the previous candle, either at this 50% retracement line or slightly below, just to confirm that sellers have taken over, technically speaking, and potential further downside from there. But again, just a little bit too aggressive for me. USD CHF was a fade trade to the upside. Very nice, Sluggy. Well, it doesn't really matter if you made some money and you know why you took it. That's all the main check boxes ticked. So Aussie Swiss seems to be having a little bit of recovery here, which is nice. Aussie New Zealand also having some slight upside. Feeling like I'm going to have to cut gold quite soon. So if we start breaking above this 200, I'm probably just going to call it a day. It was a little bit of a shot in the dark. If it doesn't work, no problem, we'll cut it. Beyond that, I don't really have anything going on. As I've already said, I wouldn't mind being a buyer of some indices. So I think I might have missed the move on the S&P, which is a bit unfortunate, at least for the time being. But I think the Nikkei makes a little bit more sense here. So if we look at these previous highs, we could be looking at something like this. We change that to a support. So previous high, previous structure, sort of within this zone. We've broken above. Look for this retest. Continuation to the upside is reasonable. I think that's quite a nice idea. I'm not sure if the Nikkei is getting a reading on the edge finder. Let's see. It's got 4. I suppose it's okay, not the best. So we've got technicals bullish, COT net positioning is bullish. The recent print seems to be a bearish reading. Economic growth overall is bullish. Inflation's bearish and jobs market's bearish. So obviously there's a tilt to a bullish bias, but I just, again, I'm not super happy with that. A little bit more of an indecision. But yeah, I'm kind of in an area right now where I don't really have anything to look at. So obviously Australian dollar Swiss is, that's a blowout trade, really strong reading, but I'm already in that one. In terms of watch list, there really isn't that much. We could look at CAD yen, for example, Swiss yen, for example. But do I want to go short on Swiss yen? No, not really. I just don't see the appeal. But yeah, beyond that, there's not much. I suppose Euro Aussie, Pound Aussie could be ideas. We've just looked at Euro Aussie, so let's have a look at Pound Aussie as well. Yeah, so I suppose maybe, I suppose there's this sort of idea here. Let's just change this back into resistance. So previous structure, obviously previous lows, break. Looks like we're having a retest here. Does the fib fit? I doubt it. Yeah, the fib doesn't. However, we could be a bit cheeky and add the 38.2. In that case, then yes, it does line up quite nicely. I don't really use the 38.2. However, in a situation like this, maybe I could justify pulling out the 32.8. I think actually, yes, this might be an idea. So if we can get, as I said earlier, as on Euro Aussie, this H1 candle to close bearish, I wouldn't mind being a short seller. Something like this. I'm just assessing. Let's go monthly. Let's just do a bit of top down first, see some potential targets. I think there's some nice areas. Monthly is still oversold on the RSI, which is a little bit of a concern. Weekly did have its correction from here, so I think that's okay. We could be looking for this area. So that would be, let's keep it easy, and let's say 1.75, I think would be a good target on a weekly time frame. The daily does have a really strong level of resistance here, which is pretty much at this fib extension. So something else to keep in mind. So I think with all of that said, we could have basically 2 take profit levels. So we could have take profit 1, you know, if you use various take profit levels. I don't really do that, but I more use it as a an area to come back and review the trade rather than it being a hard, you know, I'll take 50% off or whatever people do. So sort of take profit 1 area around this fib extension. And then if we do break below that and we can start clearing out the higher time frame lows, looking for the 1.75 or whatever level it was that I mentioned earlier. I might have intervened and Nikkei didn't budge. Yeah. Well, I think it was a case, or it's really a case. We've got different things going on. You know, we've got obviously the S&P rallying to new all-time highs. We had the Middle East, and then yes, we had the intervention. So I think there's a lot of split attention within investors. So where, you know, what are you going to focus on right now? Because I don't think it's realistic to focus on every single aspect right now. But anyway, so euro pound. Let's see. I gave up on euro pound because I just kept missing my entries. So actually, first of all, let's just see what the Edge Finder is saying here. So it's -6. It's still bearish, which is nice. So I would still consider going short. So let's just see. And again, now we're in a position, where would we draw the fib from these highs? So I'm actually just going to go to the daily. Doesn't make it easier, actually. I was going to say the daily might make it a bit easier to draw the fib, but yeah, doesn't seem so. So we'll do that. Let's go back to the H4 and let's get rid of the 32.8 because I don't really like having that there. So there we go. Technically, it actually looks really nice. So unfortunately, it seems I've missed it. But what we had was previous lows over here, break, retest, pull back into the 50 moving average, pull back into this fib zone, retest some of this previous lows over here, and really strong wick rejection to the upside. Technically, it looks really good. But as I've been saying, it's just a very tricky market to trade. It's not ideal really by any means. It's very much a case of we get, you know, horrible sideways chop, then a strong move, then sideways chop, then a strong move, then sideways chop, and then a strong move. It just repeats this horrible pattern. You know, when I say horrible, obviously it's not the end of the world, but it's definitely not the easiest to try and time your entries. Now, when you miss an entry, then you get that explosive move. So it's like I had a pending order up here. Obviously it missed by a few pips here, and then we had this move. It's just frustrating. It's a very, very annoying market to try and deal with. So if we can return back into this zone, I think I would take a shot. I think I would take a go. My YouTube channel has just been dropped in the chat. If you wouldn't mind dropping a subscribe, it would mean a lot to me. I'm trying to get to 5,000 subscribers. I'm not too far away. Yeah, Sluggy, I didn't really miss it again because I wasn't really looking, to be honest. I got focused on other things, but yeah, didn't manage to catch it, sadly. If it returns, I will look to get in. Okay, let's just do another quick review because I'm sitting on quite a bit of cash at the moment, so I'm actively trying to find some new positions to take, which I just can't seem to do. Let's see what silver's doing. Silver isn't doing too much. Yeah, metals aren't doing a whole lot right now. I think copper's having a really nice run. It's a bit unfortunate, actually, I missed this because I remember we were looking at copper not too long ago. What were we doing? So previously, I don't think it's the same situation now. I know copper was getting a bullish reading on the Edge Finder. So we were looking at this. So we wanted to see, obviously we had this bullish move. We drew the fib from the low to the high. I wanted to see the pullback into this fib zone and potentially retest this previous structure, which obviously didn't happen. So either way, I wouldn't have taken the trade even if I was watching it. But either way, it's having a strong recovery, which is good to see. So let's just do a quick check on copper. What's it getting? Score of 3. Yeah, it's not good enough at all. I suppose the other thing to watch here is these highs. So the other thing we were discussing with copper is if we don't get this pullback, then the likely outcome is we break and retest higher. So that might be the case now where we break this level, we retest and continue higher. We might see a little bit of a slowdown towards this sort of high over here, let's say 6.5. But yeah, we'll see. Again, I'm not in copper, so I'm not overly bothered about what happens. But I think that would be my base case is we break here, retest and continue higher. Pound Aussie, we've just looked at Pound Aussie, my friend. If you rewind maybe 2 or 3 minutes, I'm sure you'll see it. Euro and NZD. Looks quite nice and bearish, but again, let's just reference the trusty edge finder and see. I can't see it. Maybe I'm being blind. Let's just type it. Okay, well, there you go. So a -2, we don't really have anything here. Technicals, institutional and sentiment bias bearish. Labor market or jobs market's bearish. Inflation and growth are bullish, but none of those are deciding factors. So if we look at them, obviously from a group view, or is holistic the right word? I'm not sure. But anyway, what I'm trying to say is overall it's -2. So I've got no interest because it's neutral. Higher time frame wise, 50 moving average on the weekly is currently getting tested. The daily is broke below the 200. We're heading, or it seems like we want to head down towards these recent lows, which would be 1.96. H4 is looking quite bearish. So, like I said, I'm not looking to trade this because it's neutral. I don't have a reason to. But from a technical analysis standpoint, it looks quite clear. So we've obviously got the previous support here that's now been broken. RSI is oversold. We're in a bearish trend. So what I would want to do here, take the fib from the high to the low. 50% lines up really nice with these lows. So I'd need to see that, obviously we've had the break, so I'd need to see the retest into this fib zone, retest these previous lows, and then a continuation lower. Super simple technicals, but again, the fundamentals aren't there, so I'm missing 80% of what I need to take a trade. But yeah, that's your technical breakdown 101. Okay, let's see. GC going and going. I don't want to hear it ball out. I took a little bit of a short on gold, which isn't going my way at the minute. Good day, sir. Any thoughts on a scalping approach? Yeah, I've got a few scalping strategies. Excuse me, a few scalping strategies. One of them, this was drawn a while ago. Basically taking VWAP. So, you know, at the open, this is a futures market, by the way. This is GC. But basically on the start of day, you draw overnight VWAP. Then you basically draw another one on the London Open, which would be 8 a.m. for me, which would be here. And basically the whole idea is trading fair value. I'm not going to go into this too much because obviously this isn't a scalping stream, but to quickly explain it, the VWAP can be viewed basically as a fair value tool. So when we start getting below or towards the lower band, we can essentially say that it's a discount. When it's at the higher end of the band, we can start considering it's a premium. So you would start expecting reversals at these levels. And then when we get to the middle band, we can consider that fair value. So if we get a bounce, you know, off, then likely we're going to continue in that direction temporarily. Now, obviously, this is a 1 minute time frame, so take it as you will. But that's the core concept. So looking to trading VWAPs, I think, is a pretty simple way to go. To be fair, NZD played sellers too. James was in NU shorts, didn't quite work out. Yeah, the New Zealand, I've not checked up on New Zealand dollar actually. Let's see here. Yeah, so I was short roughly around here somewhere. I can't remember if it was here. Let's say here. So we ended up having to sit in drawdown for, I think it was 4 or 5 days. We moved to break even and then got stopped out on this bullish run. So it was frustrating. I mean, the only upside to that trade was that we got paid some swaps, but yeah, it was just a complete waste of time other than that. Good day. What's your take on GU? Just bear with me for a second. Okay. got 3 minutes until Tiger comes to take over the show. So we'll do a quick look at GU, and we'll try to get off stream in time. So yeah, as you can see here, I was looking to go long. I didn't get in this trade, unfortunately, just a quick disclosure, but technically it still looks pretty nice. I would take caution. We obviously are getting headlines in about Iran. Iran. So we're still in a situation where headlines are very quickly going to bring in some volatility and some swings into the market. So I wouldn't be overly optimistic about getting into new trades, but just from a simple view, 200 moving average is looking fine. The 50 is fine. We're in a very clean, simple bullish trend. In fact, let me get rid of that. We don't need that anymore. So I think actually, I'm just looking at, I was going to draw the fib from the high to the low, but in this case, it doesn't really make too much sense because we obviously double topped here. So I think what we would do in this situation is actually keep the fib at the previous low and the high here and look to see if we can either double bottom here, or something similar. So we have a pullback towards 50%. And then if we can get a rejection, maybe this would be a good longing opportunity. Beyond that, I don't really see much. So let's just double check. Yeah, I mean, the edge finder, a score of 1. What can you do with that? Not much. So bias wise, I'm pretty neutral. I would say overall bullish because of the trend. But again, fundamentals just aren't there to justify me placing anything. I mean, pound CAD longs, I'm becoming more CAD bull now. Interesting. You know what? Let's actually just do a quick check on oil. I haven't checked oil in a few hours. So, yeah, so the daily here came down to its 50 moving average, really sharp rejection. The H4, however, looks like a little bit of a trap. So we see this quite commonly in the markets where we have a strong move to the downside. And I think I spoke about this last week, but then we have what looks like a very convincing rejection. And that's where you'll see buyers stepping in quite heavily, specifically retail traders. And then the market just continues in the initial direction. So, and I'm not saying this is any manipulation or I'm not trying to say that. This is more just from observation. This just happens commonly. So what I would take away from this is so far, it seems like sellers are completely in control. We've come down to the 200 moving average on the H4. We have seen buyers attempt to reclaim and start pulling back, and that just has completely failed so far. Obviously, that could change. We've still got 3.5 hours on this candle, but so far it doesn't look great. So I would say the likelihood is we actually start clearing out some of these lows. Obviously, this is dependent on the headlines that we get, but I think from here, the more likely direction is down rather than up, unless we get some sort of re-escalation. So yeah, hold on to your hats because we might have a fun rest of the week ahead of us. Anyway, ladies and gentlemen, I'm going to head off. We have Tiger coming to take over the show. Don't go anywhere. Guys, stay safe. Enjoy the rest of your days. Don't get margin called, and I'll see you all tomorrow.
This next segment of the live stream is proudly sponsored by the one and only Ola Prime. Ola Prime is easily one of the most impressive prop firms that I've come across with an incredibly professional team. They offer fast payouts within 1 hour, up to 95% profit splits. They have the largest number of trading platforms. I mean, just take a look at this list. They have MetaTrader 4, MetaTrader 5, TradeLocker, DXTrade, MatchTrader, and CTrader all available to their traders. And that's just for the Forex side. On the futures side, they have DX Futures currently with Tradeovate and NinjaTrader coming soon. Ola Prime has one of the widest selections for challenges and funded accounts that I've come across, with a wide range of account balances you can choose from, like 5 all the way to 200K. And just take a look at the variety of different challenges you can choose from to fit your trading style. They have a 1-step or 2-step pro accounts. They have the 1-step prime, 2-step prime, direct accounts, Ola Prime, 1 challenge. I mean, you have a wide selection here. And the reason this is so important is that you as a trader have a unique style. Everyone does. And finding the right challenge to meet your criteria is very important. If you go through their website, which I encourage you to do so using the link dropped in the live stream chat right now, you can explore in full transparency all of the different account types, all of the rules, etc. They also offer news trading and weekend holding, and they have direct and challenge accounts available. For a limited time, stream viewers get extra discounts using the promo code that you see on your screen right now, and also through the link and promo code being shared in the live stream chat. Take your trading to the next level with Ola Prime. Now back to the live stream.
All right, what's going on, everybody? Happy hump day, happy Wednesday. Coming on here to close out the show for you guys. Already had a little bit of pot stirring this morning, as you could see in some of these markets. Had a nice risk on headline come out of Iran, come out of Pakistan that quickly got debunked by Iran, ladies and gents. That's been kind of the status of our geopolitical trading world of late. We've been having to pay a lot of attention to those headlines coming out, and only to see them turn around and get contradicted from the other side. So nothing. Hey, look, just an average Wednesday, right? As evident as ever when you look at something like oil. I mean, go to a 5-minute chart, you can see where we had that headline come out. Again, the one where there supposedly is a one-page memorandum that Iran and the U.S. may sign from Pakistan. Is that their way of just trying to get this push so that we don't have to keep going back to their country? I don't know. But anyway, oil saw a huge drop. Futures saw a big push up before the cash opened this morning. And then Iran comes out and refutes it, okay? And then we get that push back up, that risk-off push. Just so happened that oil dropped right into that 4-hour demand zone where we had that kind of push. I don't know why that's on there twice, but anyway, yeah, just kind of a drop into that zone there. Big wick, big rejection. So it's really part the unfilled orders and then part the rejection of Iran. So there you go. What's going on, Leon? Hey, what's going on, everybody? If you have any tickers, go ahead and send them my way. The only trade I'm in right now is Meta. So I did get into a Meta trade. And just a real quick look, we might as well have a quick look at it from a supply and demand look. Meta. We'll take a look at that. And then, yeah, guys, just let me know what tickers you want us to check out. So just real quick, again, guys, supply demand translates into anything with a lot of volume. Okay, so I was basically looking at this thing on a 4-hour demand down here. Kind of got bounced in this thing off of a little bit of a second chance, if you will, entry. So just zooming in here, we kind of had, let's see, we had a newly created zone on a very small time frame. And that's actually where I actually entered the trade. So a little bit of contraction, a little bit of expansion legs where you see price making higher highs, lower lows at the same time. Remember, guys, that is liquidity hunting on both sides. Anybody saying that's not a thing? Yeah, show them a chart like this where you get that fanning out action. That's exactly what that is. So liquidity hunts on both sides. And each time the price goes higher and lower, that's waking up some of the higher time frame traders. So currently did get that little bit of a lift off. Trade's looking okay. So I'm just going to let it do its thing. Again, guys, that's all because of the stock box. If you don't have access to this thing, you got to check it out. This is exactly why I got into the trade, because Meta is a plus 13. Okay. So a really strong bullish signal. If you're not messing in stocks, or if you are messing around with stocks, you need a tool just like the Edge Finder for currencies, gold, silver, Bitcoin, and the indices. Definitely check this thing out. And I'm telling you, it's going to help you guys out tremendously. So on that note, Ola Prime, you do have Nick's code there, A1 Live, as well as the QR code on the screen if you guys are looking for a new challenge account. I kind of went over the details yesterday on how quickly they're making their payouts and not rejecting payments. So, yeah, good stuff going on over there, guys. If you have any thoughts or questions on that, look at me. Look me up at Trade Like a Tiger on all the socials. I can help you out. So, yeah, bouncing back into today. I was having a little bit of issue earlier with my internet. So, okay, so we're good to go now. So, Aussie Swiss, Bitcoin, top of the list. But I got to tell you guys about a story that I about last night. So I was taking a look at the yen pairs, specifically the Swiss yen, since we were getting a very bearish score, which has actually gotten even more bearish since the -8 I think it had last night. I was getting ready for bed and getting ready to, get this trade up and running, because we had bounced into this overhead supply, this 1 hour. So just to recap on this, we have a daily. Okay. We have a 1 hour, and then we had a kind of a 2 hour, 10-minute confluence. I know that's kind of a weird combination, but it just so happened that was the picture that painted a pretty picture. Okay. So I was looking at that. Now we had bounced into this supply, created this 1 hour rejection candle, this 1 hour wick right here that went into the daily and that bottom 1 hour supply. So just to recap, and I know I mentioned this the other day, but I basically looked at these two zones as kind of a zone on top of a zone. Well, by the time you pull the daily forward, it really encompasses both of those zones. So in other words, it's just one big zone. One big zone. So I was sitting here, finished TV last night, getting ready for bed. I saw that we were bouncing into this zone. So I was waiting because we got that first push in, and then we got a little bit of a rejection. I was playing around with some volume footprint on this too, just seeing how the each price point's orders were kind of doing its thing. And I was looking for a retracement back as kind of a little bit of a second chance back up to this zone, and getting ready to pull the trigger, and the son of a gun dropped on me. And I think Marco might have was touching on it earlier. A little bit of intervention started happening. I was writing up my order on these two candles. Okay. I put in my stop loss, put in my take profit, started getting my percentages right. And before I hit the sell, price had already dropped 50, 60 pips. So just like that, completely ruined it for me. Thought you guys might get a kick out of that. And then, of course, you have a question at that point, right? Do you hop on? Because when price was already down, back to a 1 hour chart now, but when price was, after it had dropped 50 pips, I just basically took a look at the other drops that we had and kind of some of these other intervention type looks that we had, and felt like we had the opportunity to continue dropping a little further when price was basically right in this area. So, the question is, do we hop on and short it anyway? Or would I be breaking my rules by FOMO, by chasing it? Hey, I'm telling you, for a minute, I thought about it. I thought about hopping on because I felt pretty confident that we could start, at least breaking some of these lows down here, which we inevitably did. But if I would have gotten short after price had already made this 50 pip drop or so, I'd have been chasing it. So I'd have been breaking my rules. So I stayed out of it, guys. Yeah, it's annoying that I was like literally 1 minute too late. But the reality is I was, kind of waiting. Again, I was waiting for that just a little bit more of a retracement up. I was wanting to get back closer to the zones. So, yeah, the moral of the story is we don't chase. Yeah, there you go. There's your 5 minute chart. You can see where we had that 50 pip, actually 60 pip drop. So, I felt like this move was probably going to happen, but I didn't want to break my rules or completely skew my reward to risk ratio. Okay, that basically turned it into a 1-to-1. Okay, had I pulled the trigger on that, but I don't want to break my rules. So this takes a lot of, this takes a lot of patience and a lot of, it's hard not to want to jump onto something that's just slamming downwards or slamming upwards. But that's FOMO, that's chasing, and we don't want to do that. Okay, so anyway, that was my fun of the night. Take a peek. Biggie Dub says pound kiwi. Yeah, let's take a look at that for you, my guy. Pound kiwi. Let's start with my daily on the right so I can see where my moving averages are. Looks like we got, I'll have to zoom in. Okay, so 57. So it looks like the 8 just barely is below the 21. It's a little too close for comfort. We've already kind of bounced in. I'll go on the left side. We'll go to a 4 hour. Okay, so we're bouncing currently into a zone of demand. So the combination of my moving averages crossing over, not to mention the lower lows and lower highs, the combination of the downwards look, the downwards trend, and the fact we were currently bouncing in a demand zone I'd be afraid to do anything unless we break through this zone of demand to the downside. Now, what does our edge finder tell us? Pound Kiwi, pound Kiwi. I think this one was we're back to neutral, it looks like. So yeah, pretty well neutral on this thing. Let's take a look over here. I want to take a look over here on this screen. Pound Kiwi, where you at? Pound is, yeah, -4. So there you go. You got some of the growth numbers kind of in the way. GDPI or the SPMI kind of going against the narrative on here. Everything looks good on the technicals, the institutional side, the sentiment. But yeah, some of these growth numbers that are kind of standing in our way. But we're close. We're not too far away. One more piece of pound weakness or Kiwi strength, and this thing will be back on the bearish list. So that's kind of where we're at. But here's the thing: even if we had a -10 right now, or a -15 on this, I'd still would not want to do anything. Okay, you can do what you want, but I'm just saying, if it were me, I wouldn't want to do anything unless I closed below this. What I guess it was a 2-hour zone. Yeah. So here's the zone I'm talking about. Okay, it's basically a skinny doji candle right here where we had a gap up. A little bit of hesitation, but it continued, broke some structures. So that's really the hang up. We break through this area, then that makes the short a little more appealing. And again, that's if we get even one more piece of pound weakness or Kiwi strength, either one, because if we take a look at the surprise index, actually, you know what? I forgot. That was the one that's 100%. So, yeah, I don't know. You tell me. Do we really want to be short in a currency that's beating expectations on all but 2 of its reports, and then the other 2 are neutral? Let's go look at the pound. Remember, this one has 2 items that's neutral, and then everything else is bullish. I'd be afraid of that. So I know it says -4, and I know the edge finder is only a point away. But the Kiwi is one of the weaker currencies as well. We got to keep that in mind. Kiwi is 42%. So you're telling me we want to sell something that's 100% to the beat side and buy something that's only 42%. I'd be afraid of that from a fundamental perspective. So yeah, just be careful. You've kind of got a little bit of a divergence in the way I would be wanting to look at, buying and selling strength and weakness over here. And then not to mention just the technical look of, hey, we got to break through this zone. So hopefully that helps on that. You're trying to go long. Okay. Yeah. Well, I mean, the fundamentals are there. But the score edge finder's giving us a -4, right? So it's not like in the technicals, institution, sentiment, inflation on the long side. So, if you favor the technicals a little more, I got to tell you, you've got a little bit of you got some stop losses hanging down here, which we've already kind of swept through. For these buyers that ended up pushing price up, and you could argue that we could bring that a little forward, incorporate some of these buyers, because some of these buyers will be putting their stops below here as well. So the point I'm getting at is you're going to have stop losses in that zone. So it very easily could go up, but I just have learned in the time I've used the edge finder not to go against it. Good rule of thumb. Yeah, and I think this was the one I was originally interested in, because I drew this up way back here when we first created some of this basic structure. Again, that was on a 2-hour time frame. So yeah, just be careful with that. I mean, again, edge finder don't lie, numbers don't lie. We can have all the feelings in the world about what we think is going to happen, but at the end of the day, the numbers don't lie. So just be careful with that. I would feel more comfortable getting an actual bullish signal to that. Sorry about that. Yeah. Let's see what else we got. Gold leadership. What do you mean gold leadership? Matthew Gamalemo. What do you mean by gold leadership? Yeah, as far as gold, we can take a look at gold since you mentioned it, because I know that we did have a little bit of support, kind of became resistance again. Now we've poked through to the top side again, and it's turned back into support. So there you go. There's a good example of support, resistance, back to support again. This thing's acting like it wants to go up. Now, the positive headline was looking pretty good for this until Iran came out and, again, contradicted it. That's where we got that pullback. So yeah, just be careful with it. Gold, silver, still, I think, pretty well neutral at the moment. Just going back to our top setups page. Or actually, we'll go to the neutrals because I know it's not on there. Yeah, gold, silver. I do believe we were still, yeah, a little further down. So gold -2, silver -1. And let's see here. Yeah, just no real help from the technical side of things right now. I mean, we just saw the chart. It's, you know, from I'm sorry, getting some pop-up messages. Yeah, if you're a really big fan of support becoming resistance and vice versa, that's a pretty good look to the upside. But I don't want to do it. I wouldn't want to do it. Now, at least with silver, you did bounce off of a little bit of a better looking zone of demand down here at the bottom. This is a 4-hour. So this one looks, I think, a little bit better just because of that. We already got the rejection. This is a 4-hour, 1 hour. That's what that white line is the 1 hour confluence. Already got our push up, and now we've got a new series of higher highs and higher lows as we speak. Now, we haven't officially closed above this point right here. I do want to point that out. Talking about that one right there. We still just kind of wicked into it. So if we get a close up there, yeah, from a technical perspective on silver, I mean, you can see clear as day we got a zone right. Oh, come on now. You can see clear as day we got a new zone brewing down here. New demand, okay? You got 3 expanded range candles coming out. You got a gap showing the inefficiency in the market right here. This is going to color that white. So this shows our inefficiency. That shows where demand heavily exceeded supply, pushed up, broke the structure. Again, I prefer to see a close first. And then, yeah, from a technical look, this is starting to shape up for possible drop, buy, and then, you know, look to short before you get, or sell, I should say, or take profits or take half your profits or whatever style you guys have before you bounce into this overhead supply, because it very easily could bounce in and take it, steal all your unrealized gains. So that would be a good look on silver from a technical perspective, but we just don't have anything helping us out over here on the edge finder. So that's kind of the downfall to that. In my younger days, I would have bought this all day long. Okay. Till Nick ruined me and introduced me to this thing called fundamentals and sentiment. Or put it all in one spot. Yeah. Like I said, guys, I used to always look at the stuff, but I would just pay attention to what was in front of me that day. Okay. Like right now, today, we don't have anything. You go back to yesterday where you did have some jolts, some services PMI. I'd have paid attention to this like we did yesterday on stream, but then come in today and just totally forget all about it and only pay attention to what was in front of me. This was my big drawback early in my career, my trading career, was not looking at everything as an aggregate, as a whole. Okay. Not paying attention to the whole heat map, taking a look at the items that took place that I used to forget about. So that's the beauty of the edge finder. 'Tis the beauty. But anyway, speaking of the edge finder and what we can trade, go back to my top setups over here. So yeah, we've already seen the intervention pretty much. So not really a whole lot to be able to do on the yen pairs unless we get some retracements. Aussie Swiss, Bitcoin, S&P, the indices are still just a little bit too overpriced. I still need some discounts. I feel like I'm a broken record on that. It seems like every day for the last couple of weeks, I've been saying that. Like, give us some retracements. Give some pullbacks. Well, I'll tell you, there was the one pullback we had. I need to turn on my sessions over here. There was the pullback that we had back on Monday in the morning. I'm a little annoyed that I missed this trade. I'll be honest with you guys. I had this zone drawn up on a 1 hour. Yeah, this 1 hour trade here. 1 hour zone. Okay. A little annoyed I missed that. I don't know how in the heck I missed that one. Well, I know how I missed it. It's not really that I missed it. I saw when price entered this zone, but I was more so waiting on the retracement to the origin of the overall strong move up, and that was all the way down here. So, yeah, I was thinking we might get a push through it and continuation of the downside. But as you can see, and I've said this before, guys, sometimes we look at a spot on a chart and think, oh, there is no way that trade's not going to work out. That trade's an A+ setup. And then you might, on the other hand, have a trade that's maybe a grade B trade. Okay, well, this trade looks good, but there's one little thing wrong. Maybe one or two of my odds enhancers aren't standing out. Maybe I'm not getting the volume spread analysis activity I want to see. Maybe I'm not getting the overbought, oversold look I want to see on RSI, right? We look at those and we think, okay, that's the trade I might want to limp into. Whereas the one that's a grade A, hey, full regular risk and let's go for it. How often have we all been in a trade on both of those scenarios, and then the one that you least thought was going to worked out, and then the one you just thought was a shoe-in completely didn't work. We've seen that a lot. So that's exactly what this scenario was. I thought about limping in on this, but I just felt like we'd get a little bit more of a retracement. We didn't do that. That's the headlines for you. The geopolitics turning stuff around. Missed it. But just goes to show the zone worked. Okay, worked pretty well. And then the last thing on this, and the reason I avoided it, outside of the fact I was looking for this one to be a little better, the reason I avoided it was because of the VSA, which I already kind of alluded to. Okay. You had a 1 hour and a 15-minute confluence, so a little smaller time frames, a little noisier. But then if we look at the volume spread analysis activity, this is after lunch, basically, after the lunchtime doldrums on Thursday when this zone was created, there was no volume. Almost no activity on this push-up. Okay. So that's why I avoided it. And if I see this exact same scenario tomorrow, I'll still avoid it. Because these ones don't always work out. I want to see follow through on the volume. Think about it. This is effort not matching result. This is Wyckoff Theory 101, okay? The move and the volume have to match. If this move happens without the effort, oftentimes they're false moves. So it just so happens this one worked, okay? It shows the power of these zone structures, even if not everything is the way I want it to look. So yeah, again, if I see this exact same scenario, I'll probably avoid it. Okay? Because for every one of these that work out like this, where effort and result didn't match, might have 3, 4, 5 in a row that don't work. So that's fine. But anyway, yeah, that's why I avoided that trade. Hope that little lesson makes sense. Just blew up my practice account doing that exact same thing. Hey, at least it was a practice account. That's the best thing about a practice account, right? And you probably hear all kinds of different thoughts on this, guys. Some people will say, hey, stay in a demo account for as long as it takes. Some people will say, well, only stay in a demo account long enough to learn how to press your buttons, right? Because when you win or lose at a demo account, it's mindless. There's nothing there. The whole point is, and I kind of lean on this side too, stick with a demo account just long enough to learn how to use the buttons, the functionality of the platform, because the real learning doesn't start till you put your own real money on the line, right? So that was just a thought I had. Yeah, you'll hear all kinds of different answers to that, but think about it. Think back to the times that we all started on a demo account. You don't feel anything. But the minute you put even $5 on a position, you feel it. It's real money, real tangible, right? So, but yeah, at least it was a demo account, right? All right. What other assets you guys got for me? Yeah, like I said, I'm just in the one. We could take a look at a couple of these others. Aussie Swiss, Bitcoin. Aussie Swiss. This thing's just been at the top of the list forever, hasn't it? Aussie Swiss. I know Aussie Kiwi was up there as well. Daily up, okay. 8's above my 21 EMA. I like that. Going back to my 4 hour, I turned off all my goodies earlier. Let me get those turned back on so I can see what I'm doing. There we go. Okay, 4 hour chart, my 21 is basically straddling that trend line. Look at that. That's a trend line I started from back here, just connecting some points. I could probably have went further, but yeah, the 200 EMA straddling that trend line almost perfectly. So, that's just one thing to keep in mind. If we keep getting price moving forward, we could potentially at some point look at this as a little bit of a zone, a little bit of a 4 hour zone. Now, it's too premature to draw that up yet, I would think. But, just assuming we continue this line of thinking on Aussie Swiss, 200 EMA keeps straddling, give or take. Break a structure point over here. Oops. Or this supply zone period. This is basically another supply zone right here. But what I'm saying is, back to playing billiards or 9-ball, 8-ball snooker, start getting a push up at some point, retracement down, pull into demand by the time that trend line and the 200 EMA pop through. Woo! Okay. That's just a little bit of forward thinking. Breaks supply zone. That's proof there's underlying strength down here that had the power to break an opposing supply zone, which is this point right here. Break a structure, swing high, retracement. Also, you got your former support becoming resistance, that blue dash line. Okay, talking about this little swing high point over here. All kinds of, excuse me, all kinds of possible odds enhancers for that. I just need to double check, guys, what time. Oh, never mind. Okay, I guess I do have a few minutes already. Wow, time's flying. But anyway, yeah, that's probably not something that's going to happen overnight. It's going to take some time for this to kind of do its thing, especially since our 200 EMA is not down there. But you guys see that? You guys see how that odds enhancer is playing out right in front of us? Okay, try to do that, guys, on whatever your trading strategy is. If you're not doing that, start practicing projecting things out. And just again, if you've ever shot pool, okay, just kind of look at it that way. Looking out 3, 4, 5 balls, right? Planning and plotting the secrets of the universe. But that's Aussie Swiss. Now Bitcoin, which was number 2 on the list. Okay, what else we got over here? 1 hour. So yeah, I don't think anything's really changed. Yeah, I did draw up this zone a little closer to home. Oops, I didn't mean to turn that on. I did draw this zone up, and I was making the point on another chat I was doing that this is one of those what I would call more retail demand zones, okay? Because you had this kind of price action through here, all these candles, where you basically had fair market value in this period of time, right? Prices just didn't go anywhere. You didn't have a heavy imbalance of demand or supply. That's why price stays in the same area. At some point, though, you have demand exceed supply to where we push up like we did. But that zone is in the middle. So you see we wick right through it. I would never buy from a supply or demand zone inside of a consolidation point like this. I just won't do it. I love seeing these consolidations because that typically means you look below that, and that's where the higher probability plays are. And that's why I drew up this zone all the way at the bottom, and I'm still sticking with it. Talking about this, I know it's a smaller time frame. Well, it's even drawing it up as a 1 hour as well. Okay, so that remains the spot. I just looked at it on a smaller, I think a 15. Actually a 10. This was my 10-minute. Yeah, 10-minute, guys. So I'm sticking with this 10-minute zone on Bitcoin. I know it's small. I know it's a small time frame. But that's what, again, it takes a long time to really figure all these zones out, especially on the smaller time frames, because this is down where the retail traders are, okay? Not a lot of banks playing on these time frames. Maybe their algorithms are. I don't think a whole lot of their prop traders are, though. But, again, supply demand works on all the time frames. There's just a little more noise when you get down to this time frame. But it's giving me a gap. It's showing that demand heavily exceeded supply. It's showing an inefficiency in the market. This is more of a day trade. Okay, a short-term day trade. You can call it a scalp if you want, whatever the case is. But we did break structure over here. Okay, we basically erased this big drop we had over here with a move of its own. So that remains the zone I'm keeping my eyes on for Bitcoin. Look, again, we had Iran, and I'll close on this. We did have Iran refute what Pakistan just pushed out. So, that's basically giving us a little bit more of a risk off feel at the moment. If we can keep that negative news up enough to push price down to the daily or down to that zone I was talking about, get another good piece of news down here. We crossed through that 200 EMA. The alligator's mouth is opening because the 50 EMA seems to be climbing faster than the 200 EMA. Hey, might have a trade on our hands, but it's not going to happen in the next 5 minutes. Need another day or two, ladies and gents. That's about all I've got for you. I hope you have a wonderful day. Please do stay safe. And we'll be back tomorrow, bright and early. Take care.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.